All right, Gallup, New Mexico. It's Jason with Caldwell Banker, High Desert Realty. I am here working diligently on the weekend for you guys. I get to bring you today July's market update. There's a lot of positive things going on in the market right now. I've got about 25 slides I'm going to get through. So let's get right down to the July market update from Caldwell Banker, High Desert Realty. All right, so let's start with the FHFA actual year-over-year pricing changing and what's going on with, there's going to be a little bit, I mean, this is just a regional report right here. But what we can see here from the individual regions is that we can see on this chart that each region has a nice uptick in prices. So if we go all the way across the board, we're still seeing some very strong appreciation across the country. We're not seeing 7, 8, 9% like we saw on the West Coast, a year or two ago, but we're still seeing very strong appreciation across the board. And I want you to remember here that normal appreciation historically has been 3.6%, and every one of these regions looks like they're doing better than that year over year. All right, so that's our regional report right there. Let's jump into the state-by-state breakdown on the. All right, so as we jump on over here to the CoreLogic report, this is going to give us a year-over-year price appreciation by state, and you can see there in New Mexico, we're sitting at 6.56% appreciation from last year. And so you can see that we're doing a great job of the real estate market. Seems like it's appreciating across the country. Very, very positive news for you guys who have been homeowners, and even more incentive for you guys who are not homeowners to jump into the real estate market and start taking advantage of some of this appreciation. All right, so let's jump over and see what we're projecting from Case-Shiller. You can see that the annual appreciation has slowed a little bit, as we've talked about earlier this year. At the beginning of 2019, we talked about how appreciation was going to slow, and we're seeing that that's exactly happening. Last year, we were seeing appreciation in the 6.5% mark. Now, nationally, we're seeing appreciation of about 3.5. But what's really going to be important, guys, is what's going to be materializing for the next 12 months. And what we can see here is the actual year-over-year percent change in price over the last 12 months. And you can see there in New Mexico, it is projected that New Mexico, we're going to jump between 3 and 6% on our price values. And you can see there in the lower portion of the screen, the United States is looking to jump in at about 3.6%. So this is actually really, really great because of the fact that the entire country is doing strong, and we're seeing a lot of positive things from the real estate market. Now, one of the great reports that came out this month was CoreLogic forecasting on what's going to happen over the next 12 months. And as you can see, from the previous reports, the growth on the market has been doing very, very well. But what we're actually seeing here is that some numbers have changed with CoreLogic, and they're expecting over the next 12 months from us going from a 3.6 growth property value growth to a 5.6% property value growth. And they've actually increased that over the last 3 months. Back in May, where they had the 3.6% property value growth, they started feeling more confident about it. They gave a projection for 4.7 in June. And then they felt more confident about the economy and things that they were seeing in June. And they said, hey, we're going to see about 5.6 throughout July. So now what we're seeing is apparently that, CoreLogic feels that we've kind of hit bottom on what's going on with the market, and we're starting to make a turn back up. And I don't think we're going to see, 7, 8, 12% returns. I think we're going to see a nice 3.5 to 5.5% property value increases for the foreseeable future, the next 12 months or so. And that the reason we're seeing this turnaround is because demand has really picked up, interest rates have gone down, and we're going to talk about that here in a second. The home price expectation survey, is always a great thing to see what's going on, and we wanted to get you some of that information. So this is a nationwide panel of 100 economists, real estate experts, and real estate investment and market strategists. And what we're seeing here is that if we put all their numbers together, we can see that they are now looking at between 20 between today and 2023, they're saying nationally, on average, that the prices of a home will go up 16.8%. So we're going to see a nice appreciation over the next 5 years. This, at very least, is average appreciation, which is all right, meaning we're not going to see any depreciation. The bulls of this group, the top 25% of these 100 people surveyed, I think it's going to be much higher than that over the next 5 years, 27.7%. And even the bears, the guys who are the most conservative, the most negative about what's going on in the market and such like that, they always see the glass as half empty. Even they're projecting a 6.7% property value growth over the next 5 years. So really, the fact is, guys, not even the bears are considering depreciation, and the vast majority of these experts are expecting about a 16%, almost 17% appreciation over the next 5 years. So on this graph, we're going to look at the projected mean percentage of appreciation over the next 5 years to give you an idea of how we consider it's going to break down year by year for the foreseeable future. And, you know, what we're looking at is all projections. They think that this year we're going to level out about 4.1%. That's a little bit of an uptick is what we've reported recently. We felt that the pendulum is going to swing a little bit too far the other way, and we're only going to see a modest appreciation in 2020 and 2021. And then by the time we get to 2022 and 2023, we're going to see that starting to pick up again towards normal appreciation between 3 and 4%. So let's take a look really quick at the home price expectation survey. And again, this is a survey from 100 experts. And, you know, we want to look at the projected home prices, percentage appreciation going forward from 6 major entities. That last report came from just one entity, but here we are with the Home Price Expectation Survey, the Mortgage Bankers Association, Zelman, Freddie Mac, the National Association of Realtors, and Fannie Mae. And what we're seeing that each of these categories, each of these institutions are projecting again that we're going to see continued appreciation in homes for the foreseeable future. There's no numbers that are in red, which means every one of these 6 entities is seeing home growth for the next 5 years. So this was a great report that we saw in this month's market report. We wanted to get you some information. And when we take a look, you know, at home values between 2005 and 2018, we're looking at the price increases over that period of time, and it's pretty interesting. You know, if people stayed in their homes from 2005 to 2018, just that 13 years, we're seeing that, you know, they've had significant value gain in their homes. So just to give you an example, over that 13 years, a $100,000 home here in New Mexico would be valued probably closer to $140,000, $150,000 right now. So real estate is still proven to be a great investment, even for those who bought their homes in the height of the market between 2005 and about 2008, because before the boom and the bust, if they would have stayed in their home just throughout those years, they still see a pretty good amount of appreciation coming in, and that's something that's really, really fantastic for those people. These are significant equity positions is where most of these people are at. All right, so let's talk about the probability of home prices being lower over the next 2 years. And this report actually came from Arch Mortgage Insurance. And as you can see, they think North Dakota, and that's because North Dakota is really tied into a lot of energy, is really the only state in the union that has a moderate possibility or probability of home prices being lower in the next 2 years. As you can see through the rest of the country, it's either a low probability or minimal possibility of prices going down. So again, for the people that are thinking that, well, you know, if the economy slows up, they're going to see some sort of slowdown in devastating numbers, that's just not the case. And that's what is particular about this month in July that we're seeing, is that all of the projections for the last 3, 4, 5 months have been very, very conservative. This month's report is showing us that things are actually a little bit better than even what we've been predicting. Now, it's not that way across every single price point and every single agency. So here's a graph from Zelman Group, the Z report, And what it does is it surveys the bottom 1/3 of the income group of the country, the middle 1/3, and the upper 1/3. And that will represent starter homes, lower priced homes, mid-priced homes, and then upper priced homes. And what we see is that the gray scale, or the gray line, is historically how much optimism these homeowners have for future appreciation. So the bottom 1/3, historically, 62% of people in that category think that the prices are going to continue to appreciate. Right now, that survey is showing that 65%, which is above the average, are thinking that their home prices are going to appreciate. When we go to the middle third income category, the average across the years has been 70% of those people think that their home prices are going to increase, and right now it's at 74%. But the interesting thing is that the upper end, the luxury buyers, they're the higher income group. Their average from the Z report is thinking that 74% is the average that they think that their home is going to appreciate in value. And what we're seeing is that number has actually dropped down to 69% that believe that they're going to see appreciation. So I think the upper end, we have to do, we're going to have a little bit of a challenge because of tremendous overabundance of inventory, and this is across the nation. And the consumer themselves, that's, who's being surveyed in this report, believes, in the upper end, that we're not going to see prices increase, but you actually might see prices pull back a little bit. So it's important that we know whenever we're talking whenever category you fall in, that you understand what's going on historically and what the market is doing with your home pricing and such. So let's shift gears entirely. And let's get into what we're seeing from investors. Investors are a tremendous opportunity, or have a tremendous opportunity in the market. And what we're seeing is that investor purchases for all homes are typically about 11.3%. But what's really interesting is we're seeing starter homes. Investors are buying about 20% of the starter homes, and the move-up homes, they're hitting 7.8% and 6.3%. Now, when we look at the chart, you think, oh my goodness, all the institutions, the big conglomerates and corporations are buying these. But in fact, what we're seeing is that a lot of mom and pop shops are buying these homes. Here it is from Ralph McLaughlin, from an economist from CoreLogic. Investor buying activity in the U.S. is at a record high, but our records go back confidently about 20 years. What's going on and why? Well, it turns out it's not the big institutional guys that are leading the increase of home buying. It's actually the smaller guys. Those who bought between 1 and 10 properties over the last 20 years, they're the ones that are really leading the increase to investor home buying. So what we can see is what, these mom and pop investors, someone who bought 1 to 10 homes over the last 20 years, that number is increasing dramatically. But the professional investors, the ones who buy houses, and that's kind of their living, their fix and flips and stuff, that number has actually significantly dropped. So what we're thinking here is amongst agents that the institution, they're taking a lot of properties out of the market, but that's actually not the case. These mom and pop investors are buying properties, they're fixing them up, and they're turning them over. So what they're actually doing is they're buying the properties, they're flipping them, so that way first-time home buyers might be able to get into them, and that's really beneficial for the inventories. So that's I think that this is gonna happen more and more, and sellers are gonna help putting their homes on the market for a slew of reasons. These investors might be able to come in and pick up some of the more dilapidated properties and get them functioning correctly, or functioning better, so that way first-time home buyers can get into them. So one of the things that's kind of spurring, the mom and pop investors of getting into the market, here's a good example from Mark Fleming, the chief economist at First American. Title agents and real estate professionals indicate home buyers encouraged by unexpected lower mortgage rates in 2019. A tailwind is helping boost the demand and inspire existing home sellers or homeowners to sell their homes. So that's where we're at right now, is lower interest rates has gotten demand up a little bit. We're seeing a little bit more inventory coming on, increased seller traffic, and that's really just a good thing for the market, because one of the things that was holding the market back was limited amount of inventory. We had a huge surplus of buyers, We just didn't have homes to get them into. So let's take a look at what's going on with home sellers for a moment, and we're going to look at the Realtor confidence survey about seller traffic. And there's a lot more. If you've been following these reports for several weeks, a lot of the country was covered in gray and orange, which showed either weak or very weak home seller traffic. Either way, the number of people talking about selling their homes is up, and that's what we're starting to see is, very weak has almost completely disappeared or has completely disappeared, and there's still a few weak states, but more and more of the country is turning to that a light blue or dark blue, which means that more and more sellers are coming out, putting their houses on the market, and some of that is because these mom and pop investors are picking up the properties, fixing them, and turning them around so the first-time home buyers can get in there. So let's take a look really quick at what's driving that. And one of those big things about the higher demand and such is interest rates. Interest rates shot up towards December of 2018. They were going up almost towards 5%. Well, that was slowing down the real estate market quite a bit. And what we're seeing is that since December, interest rates have actually dropped. They're actually hovering about 4% right now. And this is actually the lowest that they've been in about 3 years. And so that does two things. Number one, it spurs buyer demand, not just from first-time home buyers, but also from move-up buyers who want to move into a larger house from their starter home. But it also looks at the second thing it does is that people who have been in their home and maybe were saying that they're not ready to sell right now because they don't want to lose their lower interest rate. Well, right now they have that opportunity to get another low interest rate on their next house. And so it's a great time to be buying and selling a home, moving into a new place. But understand that this window of opportunity is going to disappear. And I'm sure that it's going to disappear probably over the next 6 to 12 months. Interest rates are going to start creeping up again. So now might be the time, if you're thinking about moving up to a new house, now would be the time to sell this house. That way you get a good interest rate on the next one that you're moving up to. So really quick, just as we're going to be finishing up here, there's a couple of quotes. These are just resources, but there's a couple of quotes we want to finish up with here. And Danielle Hale, which is the Realtor.com's chief economist, lower mortgage rates, higher wages, and more homes for sale have helped counteract rising home prices and ultimately made it so that buyers are able to afford more home than they did last year. So buyers are actually able to afford more home than they did last year. Affordability is actually increasing. And the affordability index is, it means that the average price point of a home versus the average income is getting better. So you can actually buy more home on an average income. Let's jump over to Ralph McLaughlin, the deputy chief economist at CoreLogic. And he said, with mortgage rates flat and inventory picking up, we expect more buyers to take advantage of the easing market housing headwinds. And so that's a great information right there. Let's talk about the chief economist from Freddie Mac. The drop in mortgage rates over the last 2 months has already been felt in the housing market in the near term. We expect the housing market to continue to improve from both sales and the price perspective. So again, for your first-time home buyers, for your move-up buyers, great time to be buying a house. And this is supported by Freddie Mac. And then last but not least, let's look at Realtor.com. I'm sorry, I guess I got the Z report in here. But the last quote here from the Z report, key metrics tracking existing home sales demand have been in an upward trajectory so far in 2019. So this portends positively for our forecast for existing home closings at an increase of 1% in 2019, despite a 3% decline through the first 5 months of the year. So what we're really saying out of this report is the first 5 months of the year was kind of slow. We're expecting really the next 5 or 6 months of the year to be very, very productive and actually outperform everything that we did in 2018. So guys, really long story short, just a quick little market update for you guys. I hope you're enjoying it. Gets you some great information. Great time to be buying a home. Interest rates are low. Inventory is opening up. Great time to be selling a home because if you're looking at moving up or whatever, you're not necessarily going to lose the interest rate from your or a good interest rate. So anyway, guys, this is Jason with Coldwell Banker, High Desert Realty. If you need more information, give us a call, 505-863-4363. Thanks for tuning in for July's market update. Talk to you later. Bye-bye.